Thank you for being here. Today, we are celebrating again the Offsite Construction Series that's brought to you by offsitedirt.com, our medium construction platform. And we have a very exciting guest today. Today is March 30th, and we have Michele Boyer. Today, we're talking about offsite taxes to consider and where your money is going on the project. So thank you so much, Michele, for being here. I'm going to do a quick introduction of Michele before we jump into her presentation. Michele is a business advisor, and Michele has been serving her clients since 2003. She is an Iowa native, close to my hometown in Illinois, Chicago. Spent her formative years around entrepreneurial parents and grandparents that focused on basic business fundamentals and giving back to the community. She is an independent business consultant. She provides high net worth individuals and business owners with proactive, holistic planning and emphasis on strategic partnerships to various industry experts. She believes that at our core, we all just want to be happy and find meaning and purpose in what we do. Passionately persistent, she knows that her team brings value to those they work with and collaborate with. They engage in helping build one another stronger, and they see positive change in communities by doing so. She passionately pursues purpose. And as we kind of are moving forward through this discussion, after income tax, the single largest reoccurring charge for commercial property owners are property taxes. This goes back to 1796. And Michele and her associates work along CPAs, business owners, and they provide these great strategies. So welcome, Michele. We're happy to have you here at Offsite Construction Series for March.
Well, thank you, Audrey. I am so excited to be here. I just really love what I do, and I am just feel very blessed to have an opportunity to share with this what we do with you and everybody else in your community. So I'm just gonna go ahead and share my presentation, get things going here from the beginning. So I'm Michele Boyer. I'm Michele Boyer and Associates, and I absolutely positively love what I do. If you don't love what you do, find a new way to pursue your passion. And I am so blessed to be able to present with you today, Audrey. And we're just going to get started. The first is a disclaimer. I'm a business development specialist and coordinator. I'm not your tax or legal specialist. So please don't consider any of the information I provide today as tax or legal advice. Now, we have multiple tax and legal professionals that can assist you if you don't have one, but we would certainly be happy to collaborate with your existing tax or legal professional on any of the information we share. So I coughed in public. Yes, I have a cold. So I'm working from home, but if I tend to have a little bit of a scratchy throat or a cough, please forgive me. It's that season. I love it here in Colorado. So let's talk about who we are and why should you care? Ultimately, that's one of the questions I often ask myself is, I would love to get to know you better, but is there something in it for me? I think we all want to be able to say, you have a relationship with someone and they have something to offer. And our business really revolves around finding unique tax strategies in partnership with your existing professionals. And I love this slide because it really tells the truth in that oftentimes we earn a penny and then the IRS wants to take more of what we earn. This is who we are. Oop, for some reason that jumped ahead. There we go. Trying to get my face out of the way here so that I'm not covering up my screen. This is an example of how we operate. CPAs oftentimes are our clients. We're consultants, and we have an extended network of professionals in multiple areas. This is not a comprehensive list. However, the vast majority of our clients, CPAs, also serve their clients. We're a value add provider. We're not their competition, we're their collaboration. A couple of the things that we're going to address today are cost segregation, a little bit about employee retention credit, and tax credits. But these are a lot of the other areas where we can bring our unique spin to the table and again, collaborate with your existing professional. These are some of the industries that we're currently working with. Particularly, restaurants have been hit really hard this last year with COVID, as have hotels. There are some significant tax savings that we can bring to the table for them. And it's always wonderful to meet new people looking to pursue their passion and purpose in their business of choice. And again, these are just some of the areas that we can assist you with. So we're going to talk a little bit about one of our base offerings, and it's expense analysis and reduction. We're looking to increase your profits. And we're going to do that as easily and as painlessly and as simply as possible for you. And I'm going to walk through a few of the areas that we'll address here in a minute. We collaborate with one of the largest firms in the nation, well, actually internationally. And as you can see, over the last few years and over 25,000 clients later, we've saved a little over $350 million in various areas. We want to deliver value, and these are the areas that we're going to focus on. A lot of what we provide are vendor relations, and we have clients that say, well, I've already had conversations with my existing vendors. Well, the problem is oftentimes you're not able to benchmark what you're paying against your competition or other businesses that are in your industry. We're able to do that for you through our extended data system, where we know what individuals or businesses in your market sectors are currently paying. These are some of the areas that we'll address. So again, vendor relations. You're going to pick up the phone, you're going to call your Comcast or your telecom provider, and they might pacify you when you tell them you're going to leave for a competitor and take 15, 20 bucks, maybe a little bit more of that off your bill. On average, we're saving our clients anywhere from 15 to 25% through the relationships we have in being able to research the best options. Our intention is not necessarily to change your provider. Our intention is to make sure that based upon your industry and the number of services that you're being provided, that you're getting a fair price. Telecom, everything telecom, whether that's cell phone, wired, document delivery, internet service. This is an area where we find the vast majority of employers are overpaying. Merchant services, if you're paying more than 2% in credit card processing, chances are you're paying too much. This is another area where we substantially find benefit for our customers. Small package shipping. I love this slide. So many of the packages I receive are beat up quite badly, and it's just the nature of the beast. But if you are consistently providing shipping services and using some of the small carriers, it's pretty likely that we can find some savings for you through our vendor relations and negotiating on your behalf. Waste. You're in the construction industry. How many dumpsters are you having dropped at a site? Do you have dumpsters on where you store your trucks? Are you having them delivered? This is an area that we really find a lot of waste, literally, in terms of what you're paying. E-signature. How many of you have used your phone to sign a document? This is becoming the mainstream for contracts, and it's an area where we're being able to provide substantial savings for a lot of our customers, excuse me. So our intention is really to save you time. We're experts in vendor relations. We're going to be able to take the statements that you're receiving, the bills that you're receiving, look through them, benchmark them, and ensure that the time that you're spending and the money that you're spending is fair. And usually about 90% of the businesses that we work with, we're able to find those savings. Now, if you happen to be in that 10%, we apologize. We're not intending to waste your time, but hopefully somewhere down the road, we're able to work with you and find ways to help save you money. We have a knowledgeable team. We've been in this industry for quite some time. We're specialists at it. And also you can trust us to know that we are acting in your best interest. And a big piece of that is contingency-based fee schedules. we don't charge you anything up front to determine whether or not there are savings that we can find you. So unless we find you savings, we don't get paid. So let's jump in a little bit to the next topic. Taxes, where do you think they're going? These 3 green arrows are comments of the different business owners that I've surveyed. Most think that they're going up. Most think that tax liabilities are going up. And a big piece of what we're looking at is property holdings are going down. And that's a result of some of the COVID, some of what COVID facilitated this last year in terms of occupancy rates. I believe I just read that somewhere between 3.5 and 4 million people vacated the city of New York. And with the number of people now working remotely, there very well could be less commercial real estate being occupied. So how does that impact us? Pardon me. One area that we emphasize is tax incentives. Incentives is the key word there. The government creates legislation that incents us to take specific action. And they did that this last year with the CARES Act when it came to various specialized tax bonuses or incentives, often applied toward payroll tax, or literally giving you an opportunity to do a look back and recapture tax that you've paid previously. Aside from instant rebates, I love this. I don't have any instant rebates. What's the incentive? Why should you be doing this? So deductions versus tax credits, 2 separate things. A credit is a dollar for dollar, whereas a deduction creates a percentage off of your tax liability. So we're going to briefly run through some of the 6 specialized incentives, and then I'm going to hone in and focus on 2 big areas, particularly for real estate investors, developers, anybody that's holding any sort of mixed use, a commercial or multifamily property, which would be cost segregation and property tax mitigation. Work opportunity tax credits, if you're not working with a payroll company or an accountant that is helping you make this determination, we have a hiring incentive group that will help you pick the best employee in order to receive maximum credit. Some of the areas or employment groups would be anybody right now that's been laid off and has been receiving unemployment. Some of the, I've got that on here. Some are youth. You have kids that are out of college, qualified veterans. You can receive additional credit for hiring these folks. Research and development tax credits. The vast majority of businesses, actually 9 out of 10, aren't taking advantage of research and development. One of the firms that we recently worked with was an engineering firm. They were doing designs. That's research and development. They created something. Disaster relief credits, employee retention credit, and COVID ERC. It's complicated. There are all these rules involved, but ultimately what it comes down to is for the first half of 2021, you could receive potentially up to $14,000 for employee, depending upon your eligibility quarter for quarter of your revenue from this year to 2019. And so if you're not working with someone that's talking to you about this, please reach out to us. The worst thing that can happen is that you're not eligible. The best thing that can happen is you could ultimately offset some substantial amounts of your payroll tax. Cost segregation. We're going to do a little bit deeper dive here because it relates to construction. A lot of those of you that are building buy and holds in particular, or you want to sell it and incent that buyer to buy it at a determined price, can utilize cost segregation. We're going to talk a little bit about how it works. So 9 out of 10 commercial property owners are leaving money on the table. How are they doing that? They're not taking advantage of what's called accelerated depreciation, and that's what cost segregation really is. Do we want to pay capital gains or do we want to pay ordinary income tax? What's the time value of money? Is your dollar worth more today than it is in the future? Would you rather take the benefit in the future and delay getting the money today? Catch-up depreciation. The rules have changed. You can apply 100% depreciation looking backward. And again, the power of a dollar. Do you want it now when it's worth $1, or do you want it in 20 years when it's worth 50 cents? Understanding cost segregation, again, it's all about understanding what you can depreciate, what bonus depreciation is, when's the best time to do it, and we're going to skip the real estate professional piece. So a property must be depreciated. The vast majority of us working in the commercial space, the residential can be multifamily. It's either 39 or 27. How do we calculate this? I'm going to talk about that in a minute. But a big piece of what's being left on the table is this accelerated depreciation. What property can you take the depreciation in a shorter period of time? Now, the number one question that I get is, isn't my accountant or my CPA doing this? Not always, because we utilize engineer-based. Do you want an auditable report in case the IRS comes back and said, did you do this right? Hence, a lot of our clients are CPAs and they outsource this to us. We become their collaborative partner in making sure that when you do a cost segregation analysis, it's done right, and we provide you with audit defense. The fundamentals, again, we have an engineer that walks the property. They identify specific pieces of the property that you may reclassify or break out components that have a shorter lifespan. That changes the picture. Here's an example. Doors, knobs, lights, they can all be accelerated at a different rate. Here's 15-year examples. Do you have a parking lot? Do you have benches? Do you have lights, landscaping? Would you rather accelerate the depreciation on these pieces versus extend the life of these over a 27.5-year period of time? The question you have to ask yourself is, what's more valuable, $1 in your hand today or a few cents in your pocket every year for the next 27? So these are eligible properties. We're doing a lot in the hospitality space right now. Hotels are huge. They had a big impact from COVID last year with their revenues down. We have the capacity to look back, and that was changed with the CARES Act. If we could do a cost seg analysis and recapture that or apply that depreciation to a positive cash flowing or income producing year, let's say in 2017, and offset and do an amended return in 2017, would you like to get a tax return from previous years? Just a question. So again, cost segregation helps reduce your tax liability and increases cash flow, improves the time value of money because you get to apply it now. And there's this thing called bonus depreciation. Do you want to take it now or later? And it allows you to put more money back into maybe future projects. So CARES Act, this is something that your accountant should be aware of. Quite a few of them that I work with are. If you had a net operating loss, you can take 100% of that against taxable income in any given year. So in 2020, if you had that loss, this piece is huge. How would you like to carry back that 5 years? In the past, we weren't able to do that. It was just a carry forward. Take a look at this and revisit. When's the best time? Now. Did you buy a property last week? Or did you sell one? That new buyer should do a cost seg analysis the same month that they bought that property. Why? Because the depreciation on that property resets for that new buyer. Doesn't have to do with the age of the building. They immediately get to take a look and see what they're eligible for. And the look back study, this has been a big piece, a big saving grace for a lot of companies that are looking to increase their safety net or their emergency fund. Not everybody is eligible for a return, but many are. Here's an example. So if I bought $1 million property and I took out the land value, I have an $850,000 depreciable basis. If I just do straight line, do I want, if it's commercial, 21,000 or multifamily residential, 30,000? Let's take a look at the example if we use accelerated depreciation. So I'm using a 32 unit building. Oh, this is a different slide. Let's go one more. So if we use 1.7 as the purchase and we back out 15% for land, guess I had an extra slide in there. We are going to use $1,066,000 at 27. 15-year property was reclassified, 5-year property was reclassified for a total benefit of $421,000. Is this your property? Do you want to take the straight line at $54,000 annually, or do you want to take the big bite up front? Now, one of the questions we often get is, won't I have to do some depreciation recapture when I sell the property? Possibly. The question is, at what point do you plan on selling the property? And would you like this now or would you like it later? A few of the tax professionals that we work with say that if you're going to hold the property for 5 years, it may be in your best interest to take it now. Paying too much for property tax. I like paying property tax, said no one ever. The state of Colorado, their assessment is this year. You should have gotten your little square card. If you're outside of the state of Colorado, we can help with you. We can help you as well. We're in all 50 states. Each state operates a little bit differently. In the state of Colorado, if you got that assessment is in arrears. So if you just paid your property tax in March, the assessment you received is for next year. We have a small window of time to protest that assessment, and that is in May. We're happy to help you with that. We're happy to see if you are paying your fair share in tax or if we can find you a reduction. So just reach out to us and let us know how we can help. And here's the information that you can reach me at. There's my email and my cell phone number. You can dial it right now and I would not answer because it's on silence. But our objective is to help you find ways to put money back in your pocket. And what I love best about what we do is it's on a contingency basis. We're not charging you anything up front. We're going to help you assess where you're at, what you are eligible for, and how we can apply that to your circumstance, literally to put money back in your pocket from past, present, and future. That's it in a nutshell, Audrey.
That is fantastic. It just arises so many questions when I'm sitting here going, I don't know if so many people are not only educated, but like you were saying, like your tax professional or your CPA, of course, we all want to believe that those discussions are happening, but to be able to bring these questions and showing people that there are opportunities to not only saving money, but just to be more informed about what's going on. And especially with COVID, I don't know, are you working on a lot of opportunities with the COVID scenarios that have been happening?
Yeah, I think a big piece of what we do is, and I skipped over that a little bit to focus on the cost segregation because that was kind of what we had planned today.
Sure. Yeah.
But the employee retention credit and the hiring incentives, it is super complicated. There's a lot of hoops that employers are having to jump through to make sure that they comply with the rules, because it's like 50% of this number minus this number plus take away, who did you hire, who didn't you hire? So It's a lot of working with human resources and payroll companies to determine eligibility. I will say one of the bonuses, though, of the Consolidation Appropriations Act, which extended the CARES Act through the first half of this year, is that if employers took PPP, they may still be eligible now to receive an employee retention credit. So before we weren't able to layer those, and now we are. So, a big piece of us is we're your discovery team. We're going to go to bat and see what your eligibility is, utilizing our expansive resources for nothing up front. Now, we do get paid. We're not doing this for free. It's contingency based, and it's usually a percentage of savings. So I'm working with a chiropractor right now. He owns 2 commercial buildings. He bought them 2017 and 2019, and there's a little over $100,000 worth of accelerated depreciation he didn't take.
That's awesome.
And that's just on
bring that up to him. I can't even imagine. He must have been so happy about that.
Well, they're doing cartwheels. And, the business owners, any business owner that owns any real estate whatsoever should at least allow us to do a feasibility analysis. And it's not complicated. We're just looking for depreciation schedules. And on the employee retention side or the research and development, oftentimes that's based upon payroll. So most of our stuff is done online. Let's do a Zoom. Let's get some data. Let's plug you into our analysis system and get you on a call with one of our specialists.
So I like
And we have a whole team.
I love what you have to offer. And I think the other interesting thing is that you have all these other individuals that are within your network. And I think that's really valuable because we can't possibly know every single piece of what's happening in our businesses, right? We'd like to say that we can, and especially in construction, since I've been in construction, it's just amazing because you have building materials, then you're buying assets, then you have a land developer, you have all these other things that are happening. And now we're throwing in factory development, right? And we're bringing in these boxes for offsite, or we're bringing in these opportunities in this whole other industry. So I think it's really valuable to be able to have this discussion because even in my own business, it's funny because we were kind of talking about the book about putting profit first, and just those small little tweaks that you can do in your business, or at least having a conversation, is really what opens you up to allowing you to grow. So in your practice, Michele, what are you seeing as one of the biggest areas that's like basically giving great benefit to your client base right now in the construction industry? Where are you seeing the greatest growth for them to be able to acquire more tax credits or something along that line?
Well, I think it is just having that analysis because, I love CPAs. I have a lot of them that are my friends and collaborative partners. But you have to understand that they're managing 70,000 different tax codes, and they're trying to crunch the numbers and make sure that they keep you out of hot water when it comes to filing tax returns. It's the planning components and the unique tax code pieces that we bring to the table. An example would be private reinsurance companies. I'm working with developers and contractors, general contractors that are pretty large. We're talking, in some cases, gross revenues in excess of $10 to $20 million. But this works for the small guy too.
Mm-hmm.
I got a contractor out in California that cleared a little over $2 million, and we're helping them cover and manage risks. Audrey, every one of us business owners operates on two parallel paths, a risk path and a wealth creation or profit path. They never intersect, but one feeds the other. If we're not putting ourselves in a position of risk management, that wealth piece is jeopardized. What could upset the apple cart if one situation like COVID happens? So a vast majority of my practice is addressing those high level. Now, my expertise is in looking at the big picture. I'm your 30,000 foot gal. I know and I can see where the pieces might be missing, or how to bring in a collaborative team to make sure the pieces aren't missing, and how they all work together. So my center of influence could be my CPA, but we have a questionnaire that helps that business owner articulate outside of that environment what their biggest concerns are. And then we identify the top 5, and then we can bring in a specialist at no additional cost to help make sure that that other trusted and valued partner of that business owner gets the support they need to provide a more comprehensive support or process to that client.
Okay. So basically the process is they would contact you, and then you would have some kind of survey or some kind of questionnaire that they're able to fill out at that point. And then that's when you start digging deeper into how you may be able to offer benefit to them or value.
Yep.
That's so great.
And it's contingency based. So none of this is, they don't have to pay us a retainer. It's, all up front. We're putting together a proposal and showing them what potential savings are. We're showing them how to get their business where they want it to be and address any needs that they have. And it's team-based. We call it the team-based model.
I think that's great. And I think it's great, like you said, you have all these industry partners that are helping you, providing this system to help the client. I love that there's different industries that you're helping, especially, my heart is near and dear to the restaurant owners, especially over the last 12 months. Many of them, that was their livelihood. So to be able to help those individuals, and especially even the hotels, resorts, all of these different industries that were blossoming, a year ago.
Right.
A lot of them have gone out of business, unfortunately, because of what has transpired. And so it makes me really happy and pleased that you can offer a value to those individuals, because really, it's not like anybody's telling us where we're supposed to go. It's all about doing research on your own. And again, it's so difficult to even look through any of these. I mean, I get emails from the state on different things that are happening at the building department and different things that are happening with the PPE and all these other things that are happening on the construction side, but it doesn't necessarily mean that I really understand it. Are you
Right.
finding that clients are asking those same kind of questions to you?
Everybody is asking those questions. Again, we have accountants and CPAs asking those questions.
Gosh.
And so that's where we can shine, because when we say we have a specialist, that's all they're focusing on. If you're looking at property tax mitigation, we have a specialist that's what they do. And a research and development tax credit, are you eligible? Our average CPA is not going to do that. We have a specialist. And that, I think, is what makes us so valuable. Who are we and why should you care? We're the brain surgeons of all these little different nuances in managing the tax codes and all the CARES Act rules that rolled out. And we're just here to support our community.
I love it. And I have to say, if you haven't been on Michele Boyer and Associates website, you have to go there. The resources and your website alone is really easy to maneuver. I think the information really explains, giving some clarity and helping our business owners. And really, that is our community, right? Because the more we can lift up other business owners and help them and provide services where they can then put more money into their business, it means that basically they're going to be able to hire more people and expand in that space. So
Right.
congratulations on doing such a great service for us. And I think it's really cool that you guys are on a contingency basis, because a lot of people are afraid to walk into these different strategies and these different specialists because they don't know what is the cost value going to be attached to it. I think that's super valuable, especially in today's time and effort of where we are in business and in construction.
I agree 100%. I have a good friend and she says, Michele, you're the biggest source of useless knowledge I've ever met. And I laugh at her and I'm like, useless to you, but very useful to someone else, because I've just made it my life's mission to get to know as many people as I possibly can. And they're all much more intelligent than I am. I just happen to be really good at connecting the dots. So
Well, and I think you have a great background. Let's not limit it to, you are one of the strongest women I have met, especially even in the real estate realm. You've owned a tremendous amount of properties and you have expanded your own network because of that. And I think the one thing I really do value and love about you, Michele, is that you're willing to help others and try to find answers that are not the easiest things to find, and especially in the tax part of our businesses, which to me, again, it's like this whole nother blanket of trying to understand that is one of the most challenging. So having these services, walking through this and knowing that there's a lot of other strategies that you can apply to their businesses is really profound. So congratulations on creating this business and sharing your time with us today. I find it fascinating that we can always help another person in business, and we can always help another way to understand something else in our own business. So striving to do that, it is a phenomenal way to create more opportunities for more people. So thank you.
thank you. I appreciate being here. I really do.
All right. Well, we have Michele's contact information. You have a little bit of more understanding. It goes so much further and deeper than we can possibly do in this time together. But at least we have dipped our toe into understanding that there are opportunities to create more wealth in your business, and it can be in so many different industries. It doesn't mean it has to only be in offsite or in construction. So if you have, a need for it, please look up Michele Boyer and Associates online. Thank you again again for being here. We are looking forward to our next on-site or off-site construction series that will happen at the end of April, which will have another lively discussion with some other panel members. So thank you for being here. We wish you a great Easter coming up and in celebration of that, and being healthy with our families and our friends, and of course, our business owners. So thank you for being here.